All righty, everybody. Sometimes it pays just to how to complete tax form, whatever, blah, blah, blah. Unbelievable. All right. Sometimes it looks good just to scroll out, right? And see where we're at. Let's see where we're at. So we're looking at, um, the long-term picture here. That must be March 2020. And look what we've done up till then. Uh, I don't know. I'm kind of thinking that we are at the beginning of a bear market. I just got that kind of a feeling. And as I scroll out, though, it's like that doesn't look like it, does it? It just looks like kind of normal. Um, I don't know. It's interesting to at least see. I guess it doesn't matter where we are, um, but we just need to be mindful that that we are. We've had a little bit of a correction here. So it may not be a bear market, but it just kind of feels like it. Feels like we're kind of at the start of something. And when you pull in a little closer, you go, I don't know. But it seems like every time we try to go up, it gets beaten back down. So I don't know. We'll see what happens. Let's see what my new indicator looks like on my TQQQs here that I spent $29 on. Still said sale, didn't it? So who knows if that thing works or not. It was telling me to buy all this way down. Now it's telling me to sell when I'm already down. Unbelievable. I thought it was fun to have. All right, so let's check the market out for today, see what we're doing, so we can figure out what's going on. So NASDAQ's up really big, almost 1%. E-minis up 0.67%. The AD is a very respectable 314, and it continues to kind of glide right up. Had a small opening 15-minute range. Here's the cash open. Here's the overnight low. Here's the overnight high. We've taken it out. And we're taking out a little pivot point there. We're above VWAP. We're above the hourly mid-band, above this little pivot point. So anchors away, baby. We're flying, 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 flying. And the NASDAQ, wow, look at that. I mean, really, really just flying. So let's see what it looks like on our volume profile. Here's the E-minis. So we're at the point of control on volume, and we're about to knock our head on this little point of resistance here. So price is overbought. Price is overbought. So we would expect perhaps a pullback down into this fair value zone. That's what it looks like on the E-minis. NASDAQ, what does the NASDAQians tell us? NASDAQians tell us that it is overbought as well, not nearly as much, and it's at its point of control as well. So anytime it's overbought, you expect maybe a pullback into this area, but we could certainly hang out here a lot longer, especially since the point of control is here. It's really, really, really interesting. So let's see what our skew looks like. Skew today is Is that the one I'm supposed to go to? 311. 1 days. 520 is going for 520. 96. Sound about right? 6. Well, that's interesting. It was 97 yesterday, so looks like it's hanging out about where it is. 2, 8, 20. Let's check it out. So it's just kind of hovering. We do expect a reversion back to the mean on skew. That would mean SPX would be going up. So we'll see. All right. Then let's see my other little thing. I've got no signals today to do anything. So I'm just going to close it. I don't want to be tempted to keep going in and over trading or doing anything. So again, this is NASDAQ. It's overbought. We would not be surprised to see a pullback into this area to fill these little gaps on volume. All right, with that being said, but again, it still could go this way. Now, I've got a few covered calls that I've sold. Let's see what we've got here. How many covered calls we do? So we're up a little bit today. My TQs, I've got 4. Remember those 4 long puts that I went and bought, which was horrible at the time. looks more even horrible now. But I used the sale proceeds of covered calls to do that. I could sell 6 covered calls, right? I could sell 6 covered calls, but I've only got 3 there. So I'm kind of hedging my bets and saying, it's probably better to sell a covered call on a day when the TQs are up. So that gives me a little bit of wiggle room, right? To go, okay, well, if the NASDAQ is overbought, not those many Qs, Bobby. So if it's not that overbought, and here we've got our little covered calls that we sold, and TQs are up 1.46, almost 2.5%, well, a little over 2.5%. Theoretically, you could go over here, those covered calls are in the money. So I could kind of raise them all up by selling and get me another $300 here at about a 40% probability of being in the money. Give me another $300 into the account. So that should take 0 buying power, right? I think. It's going to take 36.12 buying power. Now I wonder if that's really, really true. Let's see. What if it'll let me do that? Because you would think that would be 0 buying power. Let me see if it'll let me do it. Because it says my buying power for options would be negative then. But you would think that would be. Let's see if it'll let me. No, it will not let me do it. I don't like that because I'd like to sell that other covered call. What else, Bob, could you do to free up something? Let's see. Hold on a second. Let me try another one. Because I'm thinking it's one of those things that the buying power should take care of itself after, they see what I'm trying to do, but maybe not. What would this one do? So one there. It's not helping any. So put that to money. I'm just playing, y'all. Aha! That one says I'd have buying power left over if I went at the money, right? Interesting. Ta-da! Now we're in. All right. And you would think once they settle everything out that they wouldn't take buying power since they know I've got shares anyway. That's just kind of interesting, right? So that brought in, what did that bring in? That brought in a little bit of cash. Field order, I forget what I got filled at. 345. So probably at 345. So now let's look at our Greeks overall. Up 280 on the day. Deltas are kind of flat, a little positive. Got nice theta, make it very manageable. There's not a lot to do there other than that. All right, let's go see. I always like looking on the other account, our little fortress, see how our fortress is doing today. So here's our micros, and we're slap dab in the middle of them. So that's doing good. It says my account's down $32 on the day. I don't know if that's right because I hadn't logged out yet. Sometimes it's goofy if you don't log out. What we got here? We got 18 delta, so we're practically flat. We got Vega negative 150. We got nice theta 147 here. Interesting. So let's just see what all I've got on, because over here it's sometimes hard to know. So we got some longs, and then we got a 3.5 there. Oh, interesting. You mean I've got a short 3 that I'm that close to the expiration? I hadn't closed it. And here's a 3.5 and that one. So let's look at this one and close it. I close them at? Close them at 5 cents. Oh yeah. I mean, I shouldn't have let them go down, this far, but I definitely should close those. All right, so let's close those 3. Remember, the plan is close them when they get to 20 cents, right? So we'll close those. Beautiful. So it is good to go in here, especially, and just kind of look, make sure you ain't got anything, that's, glad I did that. What we got in the micros there, Bob? Micros. You got all these in the 10 days, it'll come. And keep in mind, you see these short ones that are in the money, we want to close those before we get to expiration. If you don't, and it's in the money, you'll be short futures when you wake up the next day. You don't want to be short futures. So we'll check that out. But so far, our little micro thingamajig looks really, really good. Let's go back to our little whale again. The analysis. There we go. That looks good. Yep. Could look better. Market keeps going down. I got a feeling it will. Just got a feeling it will. Everything is showing that it's overbought on both of them. So we would think the market's going to go down. Now, what do I have as far as over here? Aha. So here I've got 4 covered calls that go down in 3 days. And I'm sure those are in the money. Well, it says it's in the money. Let's look at those. Where are those, Bob? Where are those? Oh, yeah. We're clearly in the money. So we'll need to do something on those. Maybe not today. We'll keep looking. So let's go back to our other thing. So everything's looking really, really good here. Now, I haven't checked. Let's see where my ES stuff is here. I don't have any short ones here. Let's see. What is this one? This one's at 93. Let's look at closing that, see what it's at now, because I don't have any GTC orders in here. Aha, so we're getting close there, right? To be closing at 20 cents. Those 3. Let's look at that. Buying power for options would be 0, 1.09. So we're getting close on that. I don't know if I want to have a GTC order on right now. I just need something I need to remember to watch, right? Especially because we've got these longs in our Sweet Bobby hedge to be expiring in 10 days. So we want to make sure that we take some of these out, and it'd be nice to be able to take that out at 20 so I could sell another 3 on a down day. Why do we think we're going to get a down day? And we go back here, don't we? And we go, this tells us that we should get a down day. What is this? This is overbought. So we anticipate that market movement should be down. So hopefully we'll get a good down move so we can start building our next Sweet Bobby hedge. But what I don't want to do, and you've been seeing me be a lot more cautious of late, is I'm just kind of letting things work out this time. I'm not putting on too many micros, not putting on too many, whatever. So I think that's good. And we're kind of being a little more selective, a little slower. We're just slowing our roll a little bit, and we're letting stuff kind of work out. So let's kind of go back to our plan again. Never hurts to rehash and remember what our plan is. So our plan is to create an empire, and the empire that this particular account has is in the TQs. Let's go look at it. New whiteboard. I want a new whiteboard. Give me the old whiteboard. No, I don't want to learn more. I want to do these. All right, let's go over a plan really good. So we know we got, now, first thing is we're doing TQQQQ. We're building an empire with TQQQ, and we're combining it with some bonds, TMF, to give us a little bit of a hedge there, kind of uncorrelated movements of these assets. And what my initial was is I did 70% TQ, and it's 20% TMF and 10% cash. 70, 80, 90, 100. That makes 100. So we got cash in there as well. Of course, all my cash is still go. And then we allow AIM to dictate our decisions, automatic investment management, to make our decisions on whether to buy or to sell. And I'm really excited because I'm about to pull up, once some money is transferred into an IRA, about to pull up 2 more accounts that we're going to run this in as well. That'll be kind of fun to do it in an IRA. So AIM basically is our rebalance. I've been thinking a lot about rebalancing. What is rebalancing? Well, AIM allows us to rebalance dynamically, whenever you get a signal. And then we thought about, some of y'all may just say, well, I'll just rather do quarterly rebalancing. Well, if you're doing quarterly rebalancing, you're kind of doing your own AIM. That is kind of an AIM thingy, because what you would do is you would sell those that have outperformed, assets that have outperformed. You would buy those that would have underperformed. And that is a rebalancing. So we allow AIM to do our rebalancing. So you don't have to really focus on doing quarterly rebalancing unless that's what you want to do. I think it's better to let AIM build up cash. We want to build up cash so that when the TQs are down maybe 30% in a day or two, then you go, hey, baby, let's go in. Let's use some of that cash then. So, do we have a rule for that? Not really a rule, but I think you'll know it when you've got cash in your account and then you see a really big move in TQs to the downside, then you'll want to use that cash to accumulate additional shares. So rather than rebalancing on a calendar, why not rebalance when there's a certain movement of maybe X percentage points in the asset to go? That's when I can put cash in. All right, so if you got a 3.3% move down in the Qs, that would be roughly a 10% down in TQQs. It might be a good time to use some of that cash. All right, so what else do we got? We got the Sweet Bobby hedge, or the Bobby Sweet hedge. We've got the VIX hedge, VIX calls. Now I'm still holding off on putting on another one. I want the volatility to go down a little bit. VIX calls, that's a hedge. Then we've got the 111s, which is the strongest trade on the board, y'all. So why aren't you doing them, Bob? Well, because I'm low in buying power. I don't have the buying power to go in and put a ton of them on. It's the only reason I'm not doing them daily now. So we don't want to be caught having to close those at losses. So those have been really, really strong trades. All right, so what else we got going on? What else we got going on? Well, we know that we, in periods of low volatility, can certainly do calendars. Calendars are a great low volatility trade. And I normally do those in SPY. Right? What else can we do? We can do the covered calls on our shares. Right? Especially we're doing that when the market is uncertain as it is, and maybe we're in a bear market, and maybe we need to do something. So, when's the best time to put on a covered call? When the shares are up, right? When your TQQ shares are up in the day, you can sell a call. So while I could possibly sell 6 of them, I've got 4 of them. So you start thinking, well, if the market keeps going up, I could sell another one. Market keeps going up, we sell another one. Kind of move those, prance them out instead of putting them all on at the same time. So you also saw me do something that was kind of a protective collar. So what is a collar? Well, collar is where you have sold, let's say here's your TQQQ price, and it's here. I'll show you what a collar is. So your price is at X, and you sell a call above. So here's a short call above it, and then you buy a put below it. In essence, you have frozen your shares by selling calls and buying puts. Now, I kind of like doing this in a what you would call, I don't know if it's actually a name or not, but it's a calendarized collar. Calendarized collar, where we have put the shorts calls and the long puts in different expirations. And when we initially did that, we did that so that we could put the long puts out in a farther dated expiration. But I've rolled since then, so I'm a little, now my shorts are in a further dated expiration than my longs. So we can do a collar. What else we got in part of our plan? We just need to make sure we go over our plan. We got to know our plan. Am I writing a book? Yes, I am. But what am I got to do first? I got to file my taxes. So yesterday, thanks to the state of Georgia, I was able to amend my 2020 taxes so that I will appease them because they were all upset about my farm for some reason. And so I sent those in yesterday. So we'll see. Since they have not read my last stuff that I uploaded to them since May, who knows when they will fix the error on their part, because they basically said I owe $2,000 more than what I should owe. So we'll see if I get my $2,000 back from the state of Georgia. All right, so we got our collar, we got our cover calls, we got our calendar, we've got our aim, we've got what else? We got our hedges. TMF is even a hedge. We've talked about aim. We've talked about rebalancing. AIM is a rebalancer, which is a really cool thing to do. And if you ever need to rebalance quarterly or dynamically at any certain point, you can always do that by the spreadsheet that we've got. Oh, that's our thing too, right? We've got this wonderful spreadsheet. Let's just put that on there too. Spreadsheet, which gives you the signals. And then we've got a screwdriver that we can solve. So the screwdriver is right now bullish on the market, but the big green monster, which is our market profile, is telling us that we're over. Oh. So we've got all these great little tools. We've got screwdriver, we've got big green monster, we got all this stuff that we put in to one comprehensive plan. Well, how's that plan working so far? Well, it's not working too good this year. It's not working too good this year at all. But we realize that there are going to be periods of drawdowns, especially if you're in the leverage ETFs. I mean, you're just going to have those. And what our plan is to accumulate shares on those down moves. Now, one of the problems that I made a mistake in is I didn't have the formula quite right in my algorithm. So I think I bought a little bit too much. I'm probably overexposed to TQQQ now, but we'll fix that up at some point. I'm not worried about it. I'm not afraid of holding 600 shares of the Qs right now. Why? Well, in this environment, you know, I'm going to be using some of the calendar collars, to kind of, you know, just kind of control that a little bit, just to make sure that if indeed we are at the beginning of a bear market, we're going to see the market go down, then we certainly can sell calls against that, as long as we have a time frame of 5 to 10 years. We think we're going to hold TQQs long term, which is certainly my plan. All right, which brings me to one other thing. Let's see, what was that we just brought in? TQQs, long term, long plan. Oh man, I had a 13 here. Come on, Bob, come up with it. What's a 13? I just talked about it. Calendars. Anyway, there's a 13 there somewhere. I'm come up with it at some point. But what we've got to do, so that all y'all know exactly what to do, is we got to put this into, I got to put this into a doc. Oh, I know what it was. We did include a permission that if SPY is below its 200 daily simple moving average at the end of the month, not just any time, at the end of the month, we have the option or the permission option to get out of TQQQ, get out and go to cash. We certainly got that permission built in there, and we need to keep that in there. So it's not a requirement, it's permission. Now, remember, we got really close to having to make that decision at the end of last month. But at the end of the last month, what did it do? It went above its 200 daily moving average. Let's see it here. See how close we got. Let's go back to SPY. Here we were below it, y'all. But we weren't below it on the end of the month. Here was January 31st. So what happened? It went right above it. Now, notice what it's doing now. It's trying to get up, but it's like every time that we try to go up and go back up, we're kind of getting beat down a little bit. And that's why I'm thinking, you know, especially with the incompetence that we have in Washington, the assertion that the Ruskies have already gone into Ukraine, right? I mean, Biden all but said, don't go any further. it's almost like he's already accepted the fact that they're going into the Ukraine, but he doesn't want them to go in too far. So we're about to have war. And the Bible tells us there'll be wars and rumors of wars. And we know that that's all over the place. And we know that news is noise to what we're doing long term. But it is interesting to think that there's a really good probability that we are going to at some point go under this 200 daily moving average and stay there for a while and perhaps be in a bear market. So we're just kind of preparing for it. Now, the prudent student would probably say, well, I'm getting out all this TQQQ now. I'm going to do that. And I'm not. I'm just sitting there thinking, well, if we do, hopefully we'll be able to accumulate more shares. Now, at this point, I may have to put more money in before we get more shares, but we got to do something. So I think over the long term, we're going to be fine. It's just these little short-term news that we think about. And we think about, you got a president who pretty much has said, hey, Russia, don't do too much damage. So we got that going against us. We've got a Fed that is now forced to pump the brakes on the quantitative easing. And a lot of people are most concerned about the interest rates rising. That's not the problem. The problem is they're going to stop pumping the money into the system. They're going to quit, buying all these stuff and putting their money in there. So that's the real problem. So all of this is news that we say is noise, but certainly it's going to have an impact on the short term, especially when we see that we are overbought on our charts. So you put it all together, and it makes the look of us going into some type of bear market. Now, for how long, we don't know. So again, we've got the Ruskies, and I'm going to put USSR. Bobby, there's no USSR. As long as Putin is in charge, there is a USSR, It is. The Ruskies are there and in all their Soviet glory, in my opinion, as long as Putin is there. And by the way, dude, change your name. I mean, I'd go Potton or Pitten. I'd do something. If he only knew what that kind of reminds us of every time we hear his name over in the United States, you kind of snicker. I wonder if he knows we're snickering his name. Anyway, he's probably about to kill a lot of civilians as he goes into the Ukraine. And then you got the communist China, the murderers, the baby murderers, and the most oppressive government on the planet right now, maybe except North Korea, who are basically watching to see how we do nothing with Russia going into the Ukraine. And then most certainly they're going to go and say, watch what we do to Taiwan. And then again, you've got Papa over here that's, just snoozing and having a good time getting ice cream. So we got all these problems that are going on. That tell us that there could be some turbulence ahead. So if you're not yet in the AIM program, well, maybe you're sitting there and you're waiting on that down move before you get in. And I understand that totally. Makes total sense to me that you would wait. Me, on the other hand, I am a risk taker, and this has served me well in life. You wouldn't think I was a risk taker because I'm pretty conservative in all aspects of my life, except when it comes to investments. So, I am the ultra conservative libertarian that just says, just leave me alone. Government, leave me alone. Let me do what I want to do and stay out. But you can't ignore all of the stuff that is in the world and in the news. As much as I don't listen to the news, I just grab a highlight every now and then. And it is saying that things are really, really bad. But if you look through if you ever want to dig out your Bible, you ever go to Matthew 24? If you ever look that up, go to Matthew 24, just kind of read and you'll go, oh my gosh. But Matthew 24 is applied for a long, long time. It talks about, the condition of things in the world, and you read it and you go, wow, yeah, I see it today. And that's why you think that there could be these down moves. So fortunately, what we should view is down moves as opportunity. opportunity, right? When everybody's running away, we run in. So fortunately, we've been able to take out the two biggest problems that investors have, and that is fear and greed. And how have we done that? Well, we've done that by basically becoming algo traders, algorithms, and using processes and systems in order to make decisions. Right. So we've taken out the human emotion of fear, greed. One thing that we've not taken out is the envy. You see someone posting that they made $2,000 in a day on a 0 DTE. You go, well, maybe that's where I need to be. But then you can't pee every day. You'll be watching the markets every day. You can't have a life. You can't spend time with your family. So that's no life. I can't do 0 DTE. And they're about to make the 0 DTE expressions in SPX 5 days a week. That's coming on the second half of this year. So now you can do a 0 DTE 5 days a week. And that is not good for your health. Trust me. How do I know? Because I've done it. I sit here and think I probably need a catheter hooked up to me so I can pee. That is not good. That's not where we want to be. So we want to do something a little more long-term, something that takes the emotions of fear and greed and just puts those aside. Now, I'm probably not going to be able to help you with envy, because you'll say, well, Bobby, we're down a little bit, aren't we? Yeah, we are. Well, the 0 DTE guys, they made $2,000 today. Okay. If you want to ruin your life, run over there. I just don't see it. I just don't see that at all. So we're going to make longer term decisions. We're going to look at the news as noise. News equals noise. I'm going for a longer term view, which has always served me better, because that's what I did, right? With my TSP, thrift savings plan, with the government. What did I do? Well, little 18-year-old Bobby says, I think I put it in the S&P 500, which was a C fund. And then I said, well, I think I'll put 5% in there because that's what they're going to match. And then think of everything that I saw since I was 18. So when I was 18, that was in 1988. So what did I see? Well, I saw the roaring 80s. I saw the 90s, which I believe was pretty good. And then I saw the dot-com bust of 2000, right? Remember Y2K? We all gonna die because the computers don't know it's going to 2000. Remember that? Then we had the dot-com bubble, the dot-coms, pets.com, all those things that went bad. So I saw that. And what did I do? Did I go, well, I'm gonna go from the C fund to the government fund? No, I didn't do that. I just kept it on in the S&P, baby. Then I saw 2000, 9/11, 2001, when that they run into our little buildings with the airplane. Y'all remember how bad that was? And did old Bobby say, well, I need to get out of the C fund and go into the government bond fund? No, I didn't do that either. And then I went through the 2008 crisis, the mortgage crisis, and that debacle. And everybody said we was all going to die. And, nobody ever be able to own a house again, blah, 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 blah. So I lived through that. Then I'll be darned, here come the COVID crash of 2020. It seems like 2018 was turbulent. From, if memory serves me right, October through December 2018, it seemed like that was really big time. And what did old Bobby do? Did old Bobby go, well, I need to get on out? No, I didn't get on out. So, for 30 something years, or whatever many years it was, old Bob just went through it, just went through the news. And I went through Gaddafi, and I went through Osama bin Laden, and we went through what's old fellow in Iraq state, Saddam. We went through Saddam. We went through the Scud missiles. We went through the Afghanistan war, the Gulf Wars. I forgot all about the Gulf Wars. We went through the Gulf Wars. We went through North Korea shooting little bombs out into the Pacific. We went through a few Olympics. We went through China doing whatever they wanted to do. We did, remember when Russia had some problems with Georgia the other couple of years ago or whatever? Then we went through Yugoslavia. Remember that? There's not even a Yugoslavia now. So what you need to realize is when you're an investor, especially for the long term, all this stuff that kind of gets us down and makes us think, man, we'll never recover. It's just, say it with me, it's just nothing but noise. Noise that is meant to derail you. So if I had got derailed, you know, in 92 or 94 and said, oh, I better play it safe. I better play it safe. I'm going to go out of the S&P 500. I'm going to go into something else. Then I would have never been where I'm at today. Because I was able, somehow, some way, I don't know exactly how, I was able to look past the noise and to say, baby, I am invested in the United States of America. That's where I'm going. And you do that for several years and you're going to be okay. So keep in mind, all this stuff that we do on a short-term basis is really just short-term. So what's your investment? Mark says, so do you do the same thing for TMF as TQQ when it's down? What do you mean do the same thing? When it's down, it's part of the AIM algorithm, right? So it's part of the AIM algorithm that says, you know, buy or sell. So yeah, it's in the program. So AIM will tell me when to buy or sell. Now, the thing that I've not done yet is I'm not sold any calls against TMF, not sold any calls against that. So I'm not done cover calls in that yet. It's not as liquid. They don't have as many expirations. You don't have the weekly expirations. Everything's more monthly there. So I hadn't done that yet, Mark. But a good question. But I hope what I'm trying to convey to everybody today is this. Whatever happens with China and Russia and all these things, I mean, let's go back, baby. I mean, it was World War II, baby. You know, hey, we're all going to, you know, recover from that. Then you have World War I, then you got Korea, then you got Vietnam. You know, you got all this stuff that we come through. We come through just okay. And you may not be a believer yet, but you got to believe one thing, that the corporation is going to be just fine. Over a long period of time, the corporation, the American giant of entrepreneurship and innovation, is going to be just dang fine. They somehow always are. But what you and I don't do is we don't pick which one's going to survive. Because remember, that's looking at the haystack. Look at the haystack. Got the haystack here. And then you and I try to find that one little needle on the haystack. And try to identify him. I can't do that. I'm no Warren Buffett. So instead of looking for the needle in the haystack, you and I do something a little ingenious. What do? Well, we buy the whole haystack and allow the index to reward those that are worthy of staying in. And if somebody drops out and says, oh, I started losing money, guess what? The index kicks them out. Boom. They get kicked out of the S&P. They get kicked out of the NASDAQ. So let's let the index itself self-cleanse. Let it reward those who are on the outside, those little golden nuggets that are down here that are not in the index yet, but they're doing great. Guess what? At some point, they're going to go, whoop, they'll be sucked up into the index. And those that are dinosaurs and underperform will be kicked out. Remember, these indexes self-cleanse. Happens every year. Somebody's going out and somebody's going in. So who do we have in here now in the NASDAQ that we're working with? Well, we've got Dollar Tree. We've got Costco. We've got Starbucks. We've got, what's some Dollar Tree, Costco, Starbucks. I'm trying to do some of the non-techie names. We've got Ross, where Beth spent $16 in December. we've got all these companies besides Apple, and we've got Netflix. Bobby, I don't think Netflix is going to be able to survive. They just took that big old tumble. Well, I don't have to worry about it because guess what? If Netflix doesn't survive and they're replaced by someone else, then there's somebody out here right now that's ready to take their place. I don't have to worry about Netflix. Well, Bobby, what if Tesla knocks out of it? What if they don't make it? Well, they'll be replaced by somebody else. It self-cleanses. I don't care if it's the S&P 500 or the NASDAQ. And there's always going to be 100 companies in the NASDAQ that are going to be just fine overall. That's why we go with them long term. Or the S&P 500, they're going to be just fine. And the S&P 500 doesn't care what China and the Ruskies are doing. They don't care. We just need for trade and commerce to continue. And believe it or not, trade and commerce will continue. It will continue. People will continue to buy, even in raging inflation, even with the Fed doing whatever. So keep in mind that our linear path to wealth is not linear. It's not a straight line. Our path to wealth may be, and sure, we want as low a volatility as possible. But if we wanted that, then we shouldn't be in a leveraged ETFs. You should be doing your AIM in SPY or the Qs, not in some UPRO or TQs. So do you believe monthly or bi-monthly AIM is the best amount of times to do AIM? If I had to do, if you made me, if you put a gun to my head and said, how often should I look at it? I'd say probably once a month. Look at it once a month. I'd look at it on probably the last day of the month and then see what it said do. And I'd either make my decision on the last day of the month or the first day of the month. I'd probably do it on the first day of the month. So I'd look at it, I'd probably do it monthly. I think that'd be where you would look, and then go look and see if on the last or the first day of the month, if you get a signal, and take the signal and then close it up and don't look at it. Don't overtrade. That's what I have a bad problem, in my discipline doing. Even though we've got something that takes the fear and the greed out of it, I probably do overtrade. Just don't overtrade. Just let it run. Let it run. And you got to figure out what your risk tolerance is. I mean, I'm thinking that a lot of people don't have my risk tolerance. It doesn't bother me at all because I've seen fire and I've seen rain. I've seen sunny days that I thought would never end. And I just kind of realized that, doesn't matter if it's Y2K or 2008 or 2018 or Corona crash or whatever, things keep coming back. Oh, and a lot of people are upset about inflation. Okay. What do you think will happen to asset values during inflation? Well, the first thing you would say, well, Bobby, asset values will go up during inflation, even though, the relative value of them will be down. So, that gas is going to go up, that food is going to go up, everything goes up. Well, what do you think happens to the value of stocks? Oh, those go down, Bobby, when everything else is going up. Really? 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 I mean, look back. You think stocks are down during periods of inflation? I don't think so. Because those dollars, there's too many dollars out there chasing things. Well, guess what? It elevates the value of stocks as well. They're not immune to it. Now, maybe in a temporary, stocks can always go down, but you're telling me that stocks are just going to go down because there's inflation? I'm no economist, but I play one on YouTube every day. So I'm just not at all concerned with the news. Now, isn't it amazing that I can remember when Melania and Donald got COVID? And I was like, oh gosh, I got to open the market up. I got to look. And then I had to remind myself, Bobby, it really doesn't matter if Melania and Donald's got the COVID when they were president. Does it matter that Papa Joe's got the COVID? Probably not. Does it matter if Nancy Pelosi's the head of the House of Representatives? Really doesn't matter, especially if you're following her trades, right? You really want to make money. She needs to be telling us what to buy. She might be the Warren Buffett that we all strive to be. So just don't worry so much about the news. Get you a plan, go with your plan. Now, you may feel funny during a 40% drawdown in your account, right? But you don't believe in your plan. What's your plan? Have you written your plan? Everybody's got to have a plan. And I'm afraid that some of you don't have a written plan. You've got to write your plan. Now, I'm writing my new plan. Since we've been introduced to AIM and everything last year, I am writing it. It's not done yet. But that's why I go through the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13s to let you know here's what my thought process is. Got a thought process, which we've got a process. But what happens is there are times when the University of Alabama with Nick Saban loses to UL Lafayette or UL Monroe, whatever they were. And UL Monroe beats the University of Alabama every now and then. It's going to happen. It happened during Nick Saban's first year. Then the next thing you know, old boy's rattling off 6 national champions. You think he had a 40% drawdown in his first year? Of course he did. Turned out to be 6 national champions. And he ain't done yet. He ain't done yet. So good discussion today. Really, really good discussion. I enjoy these discussions where we don't overtrade. Don't overtrade. Don't overtrade. Just go slow and steady. Slow and steady. All right, good session, y'all. So hope you have a great day, and I will see y'all tomorrow.